Welcome to Financial Issues with Shana Burt, where we join reality with truth, helping you to make the most of your money by honoring God with your investments. Now, here's your host, Shana Burt.
Well, good morning. Welcome to Financial Issues. I'm supposing I'm live here. Am I live, Seth?
Shana, you're live. Yeah, we're here. Good morning, everybody. Shana, it's good to see you, though I'm not seeing you right now. I know that you're here.
Yeah, see the picture of me. We had some outages in Texas last week. That's why I was audio only last Friday, and our electricity didn't come back on until Saturday night. And so apparently some of the equipment here at the studio is not functioning, not fully functioning this morning. So we're here.
It's turned on us, as it always does. But we're here.
Yes. Well, welcome to Financial Issues. I'm so glad that you joined us today. We are a listener and partner-supported stewardship ministry, helping you be a good steward of everything God has trusted you to manage. We hope that you'll hang around for the entire show. Maybe if you're catching us for the first time today, give us a shot. Check us out. See what we're all about. Today, we're going to be talking about dividends, what they are and how to obtain them in a God-honoring way, and how to use them wisely in the construction of your portfolio, your investment portfolio. We'll also be answering your questions about how to build a biblically responsible portfolio from a heart that really seeks to put God first in everything. Yes, even including managing your investments. Whether you have a little or a lot, we encourage you to see what you can glean from our strategy. Our stewardship verse today comes from Proverbs 11, 24, and 25. One gives freely, yet grows all the richer. Another withholds what he should give and only suffers want. Whoever brings blessing will be enriched, and one who waters will himself be watered. We'll dig deeper into that later in the show. But you hear us talk about biblically responsible investing. We also call that defunding darkness, because we help you to keep your investment dollars out of, from being yoked with woke companies in corporate America who are funding agendas of darkness, like abortion, the LGBTQ agenda, human rights violations, pornography, and so many other things that grieve the heart of the Lord. And we don't want to be involved with all that. Our second fold mission is to fund the light, to encourage you to be a joyful and generous giver. And we have opportunity for you to do that in the month of May. We have partnered, it's been a longstanding tradition here at Financial Issues in the month of May to partner with Preborn Ministries to help them raise money to fund the light of the good work that they're doing in helping mothers in crisis pregnancy choose life. So when you give to Preborn in the month of May, a generous donor is going to match whatever we raise for Preborn and make a donation to Financial Issues as well. So if you haven't made that gift yet, and so many of you have already, we're off to a great start. I think we've got, 80,000 already?
Yeah, that's what we're looking at this morning, Shana. Fantastic day yesterday. So we're up to 80,000, which comes out to about 14 ultrasound machines. So just imagine how many thousands of babies are going to be saved from those 14 ultrasound machines. We're almost to 15, Shana. Just amazing. Thank you all so much. And let's just keep this thing rolling. This is awesome.
Yeah. Let's keep it going. We've got 85 more to get.
Yep, that's right. We're off to a good start.
Yes, we are. So thank you if you've given already.
Yep.
All right. So after a pretty heavy economic calendar week last week, we're in the thick of earnings season this week, and that's going to be the bulk of the economic news this week. So I've got a few tidbits here from some earnings calls that for companies who have already reported, and I just want you to pay attention to what they say about the involvement and influence of the government in their business. Keep in mind, these are private companies that operate in the free market, and some of the things that they say in their earnings calls is giving us a glimpse into really how involved and how big the government is getting, how they have their finger in just about everything. So, so many young people these days are trying to decide whether to rent or to buy homes. You know, you've got to live somewhere, so you're trying to make that decision.
Yep.
Well, you know,
not in your
for
parents'
most people,
basement, preferably.
right. For most people, it will likely come down to an affordability issue because there still remains a pretty wide spread between rents that people are paying and the average monthly mortgage payment to own a home. So we've seen home prices continue to go up in spite of interest rates going up. Interest rates going up tends to decrease demand for home because nobody wants a 7% 30-year mortgage when, you know, for so long we were used to seeing mortgage rates in the 3%, 3 and 4% range. But this is what an apartment leasing company said in their earnings call. Mortgage rates and rising home prices have kept move out to buy homes at historic lows. So meaning people who are moving out of wherever they are to buy homes at historic lows. They said 9.4% of our move outs in the first quarter were attributed to residents buying home. That's the lowest in our history. So this is from a company that manages apartments. The monthly cost of owning a home today is 61% more than leasing an apartment. So this is not going to change anytime soon, they said. Demographic trends continue to be a tailwind supporting demand from high-propensity groups to rent, including young adults aged 35 and under. Apartments should take a larger share of household formations given these demand drivers. 2024 demand should be sufficient in spite of supply concerns to set up an accelerating rent growth. That's not good news for 2025 and 26, assuming the overall economy continues on the current trajectory. Now I'm inserting, my thoughts here that if the economy suffers, if we go into a recession, that's going to impact that because people will be probably moving back into their parents' basements. March apartment starts. This is the apartment leasing company continuing to say this. March apartment starts were the weakest since April of 2020, are down 53% from peak volume and falling. So shifting gears a little bit to a call from Hershey on Friday. So we all know what Hershey's makes. They said, so we do know that we saw impact from SNAP, that's food stamps, reduction in the business in the back part of last year. We are beginning to see some stabilization as we start to lap some of those reductions. However, we do continue to see value-seeking behavior from consumers. So this still hasn't changed. Oh, I'm sorry, I skipped the part on the apartments about the starts, and what they say is that is very dependent on the people who are building apartments are getting assistance from the government. So they're building the low-income apartments. They're cashing in on those government subsidies. And then here we see Hershey mentioning a reduction in food stamps as impacting their business. So, we really shouldn't be seeing government this involved in the private markets, but this is just where we've come to as a society.
Shannon, it's true. It reminds me of Ronald Reagan. You remember he said, what is it? If the government ever says if someone ever says I'm from the government and I'm here to help, that's a warning sign. That's not a good thing.
Yeah.
Right?
Yeah.
Yeah, it's true. Shana, we have a teachable moment here that I think would be really good to get to as you teased up. We're coming to the end of this segment, though, so I don't know if we're going to have time to get to it right now, but maybe I can just tease it for our audience a little bit as you talked about that topic of dividends. It's a topic we talk a lot about today. We're just going to try to break it down, kind of the value, the purpose of it, as well as kind of speaking to the various viewpoints on the practice of dividend investing. That's all I could get to in this segment because we got to wrap it up here, but that's coming next segment.
We'll come back with that.
Yep.
And our phone lines are open, folks. 610-363-1110. If you've got some questions, give us a call. We'll be back after this break with more financial issues.
The miracle of carrying a child creates a unique bond between a mother and her unborn baby. She feels the baby's movements and responds to their needs even before birth. Help create that bond between an abortion-minded mother and her unborn child by giving the gift of life through Preborn. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time, that sound will change a woman's mind and cause her to keep their baby. Give the gift of life to the woman that gave you life by sponsoring an ultrasound. Go to preborn.com/FISM to give. That's preborn.com/FISM. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Welcome back to Financial Issues. Thanks for sticking with us here. We're so glad that you have joined us, and looks like our phone lines are lighting up. We're going to get to those calls in just a minute. I want to give a market update, though. We had a big finish to the week last week as all three stock indices rose last week, and this week they began somewhat quieter. Last week we had the Friday jobs report came in at 175,000 versus expectations for 250, and the market loved the bad news. Fewer jobs and a weakening job market is typically bad news for the economy. It indicates that the economy is slowing. Instead of seeing the weak jobs numbers as bad news, though, it really revived hopes that the Fed is ready to blow another bubble by lowering rates before the election, and we do think that will happen. Lower rates will add liquidity into a system that is already full of money that has been injected from government spending. We've got the Treasury still acting like we're in a depression, trying to spend tons of money and stimulate an economy that they claim is strong. So doesn't really make a lot of sense. They're not really they're not really acting on the information that they believe to be true. If the economy is so strong, why is the government still spending so much money? And that will create more inflation. Inflation is remaining sticky, and it's not expected to decline anytime soon. Now, the Fed, Jay Powell knows that he has a way better chance of keeping his job with the Biden administration than he does with the Trump administration, and he wants to appease the market. So instead of raising rates, which is typically what you do when inflation starts to reignite, he is more likely, and I said this probably a year or more ago, that it's more likely that the target for inflation is going to get raised from that arbitrary 2% to 3% because the Fed is set up for a really tough, if not impossible job to reduce inflation when the government continues to spend. So I think Powell will do all that he can to keep his job and to stay in his position, and he will likely do what the market expects, such as cut rates to get reappointed in January.
Shana, it's never comforting to me when political leaders do whatever they can to stay in power instead of maybe what's right for the people, which is a shame because we see that a lot.
Well, the Fed is supposed to not even really be political.
Yeah,
The Fed is full of non-elected officials. They are appointed by administrations, and they are supposed to be totally separate. But you've had the Fed enabling the government spending because, as we've seen, the buyers go away for our debt. The Fed has stepped in, and the Fed, has inflated their balance sheet during the COVID time to over almost $9 trillion. They've kind of pulled back, but they're never going to get that balance sheet back down as long as they're enabling government spending, and it's just a sad thing. It's taken our country in a very wrong direction.
Yep.
So yesterday, by the closing bell, the Dow was up almost 0.5%, the S&P was up a full percentage point, and the NASDAQ up almost 1.2%. The 10-year Treasury was at right around 4.5%. So speaking of the Fed, they are reducing their bond holdings by about $95 billion a month. And, what that is doing, they're letting that debt roll off of their balance sheet. So they're supposed to be reducing their balance sheet, but the government continues to spend money. So how's that going to work? How's the Fed going to reduce their balance sheet when the government continues to spend money that they don't have? Our debt is growing by about $1 trillion every 3 months. I know we've totally lost any rational concept about what a trillion is because we hear it so often, but it's a tremendous amount of money, and we're growing our national debt by $1 trillion every 3 months. It's not sustainable, and I think something is going to have to break and cause a lot of pain for Congress to make them change their irresponsible ways. In response to this, so we talk about these broader issues, and sometimes people wonder, well, what does that have to do with my financial issues? What does that have to do with my portfolio? What does that have to do with my decision to buy a home or buy a car or change jobs? Well, a lot of that is a much broader issue. I can tell you what it means for your portfolio. We have not adjusted the asset allocation models officially in any way, but what you're going to notice is that our buy list has gotten much smaller over the last few weeks, and we even lost, and I just lost connection to my computer altogether. So,
Shana, I'll hop in here for a second. We can pause that if you'd like to. We got a couple calls in the queue if you want to get to some of these calls here.
Yeah, let's do that.
Yeah,
just keep in mind I have no computer.
Yep, absolutely. At least we can still hear you, so that's good. And we'll be able to hear Dan calling from Ohio. Dan, good morning. You're on Financial Issues.
Good morning, Shana. This is Dan. I'm had a question on a couple stocks. One is IN76. It's listed as a sell, but it's not highlighted in red. Does that mean it's a recommended sell, or is it no longer biblically responsible?
It is still biblically responsible, so it wasn't for that reason. It was just fundamental reasons, really. We're seeing tonnage. We're seeing their business. I don't want to try to give away what the company is, but we're seeing their business decrease a little bit. We're seeing some of their cost accelerate, namely their insurance cost. And so it is a fundamental reason that we're doing that. The highlighting in red, we typically try to highlight the ones red that are on the sell list for non-BRI reasons, but that is not the case for this one.
Okay. Now, its pay date on dividend is 5/24. Can I wait till sell it after that?
You can if you want. Is that the X date or is that the pay date?
That's the pay date.
What's the X date? All you have to do is wait till the X date.
Oh, okay. Yeah, then I can do that.
Mm-hmm. Yeah, because
you may
the
not
X
have
date.
Access,
You
may not have access to the other stock that it's no longer listed in, or do you know what it is? The second stock it's a stock that I don't think you guys have been tracking. It's not on the, I can't find it on the
broad list. And, yeah, if it's not on the broad list, it's not something that we.
An energy stock. and I didn't.
Are you
know
trying to
if
find
it
out
was
if it's not on our broad list, is what you're saying?
right?
Okay.
Yeah.
If it's not on the broad list, it's not something that we're doing active research on, most likely. Are you trying to find out if it's biblically responsible?
Yeah, I mean, I could probably run it through your checker, right?
You know, Dan and Shannon, I can actually confirm for you right here. I'm seeing the stock right here. It is not biblically responsible. It is not screening
Okay.
clean right now. So,
All right.
Okay.
Well,
So
there's the answer.
yeah.
Probably one of the reasons that we don't follow it.
Okay. All righty.
All right.
Thank
Perfect.
you so
Well,
much.
thanks for calling in, Dan. We appreciate your partnership and your questions. Being brave enough to ask those questions, because I'm sure if you've got questions, so many other people do as well. They're just not brave enough to call. So thanks.
Thanks, Dan.
All right. Where do we go from here?
Let's see, Shanna. We can get to another call here. We've got, this is Dee calling from your home state, Shanna, in Texas. Dee, good morning. You're live on Financial Issues.
Okay. Hi, Shana. Yeah, I'm calling from Texas. I know you're from here, too. I've got a question about retirement account. I'm a partner, and I've got about 30% of my assets in a qualified retirement plan with my former employer, but it's a bond fund that's getting like 3%. So I'm thinking about rolling that into an IRA that I already have at a brokerage house to get a higher yield. My one question I have is, if I do that, are there biblically responsible brokerage houses that you all recommend, or not?
There are not. So, and this is a great question, because it's a good opportunity for me to explain the difference between patronage and investing. So patronage is whenever you pay a company for their good or service. So in this case, you're talking about using a brokerage firm's services and, you know, them earning money off of your investing activities. It's the same thing as going to Walmart. Walmart's not biblically responsible, but we, you know, sometimes we don't have any other options, and we go there. So to me, where stewardship responsibility ends is when you exchange money for a good or service. So whenever you go to Walmart and you give them money and you get some goods in exchange for that, your stewardship is now over the goods that you bought. You don't own that money anymore. The company does. So they are responsible for the stewardship and what they do with that money. So we are more focused on being an owner of a company, because whenever you buy shares in a company, you still have stewardship responsibility. The money is invested. Let's say that you invested in Walmart, and let's say that they're doing, and they are doing, I don't know exactly the screens that they violate right now, but I can go ahead and assume that some of them are the LGBTQ stuff. And so now you're an owner of Walmart. You're not getting to make the day-to-day decisions about what they do with money. As a shareholder, you're hoping that they use the money to return value to you, that they either pay you a dividend or they reinvest that money back into the company so that the company becomes more profitable and the share price goes up. Now, what you're not hoping that they do is, you know, fund organizations that are promoting agendas that you don't agree with as a Christian. So you still have stewardship even though you're not making those day-to-day decisions. But the one decision that you can make is whether you stay invested money or not. So we don't have any biblically, and it's always great if you can spend your money with companies that you know are not promoting those kind of agendas. But sometimes it's just not possible. But then, you know, it's reassuring to know that you don't own that stewardship responsibility for what they're doing with it, like you do when you're investing. So, you know, I would just choose a good platform, and I don't think that there are any out there that don't fail the screens. But it's just like, you know, using a phone. You've either got to, you know, operating systems. You've either got to choose Apple or you've got to choose Android. Neither one are biblically responsible. So, just find a good platform that you like and then choose biblically responsible investments from there. I hear the music, folks. We've got to take a break. And if you're listening on an outlet that carries the short version of the show, we have to bid you a farewell. But for the rest of you, we're going to come back with more financial issues. So don't go away.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
All righty, let's see a bigger one here from Spectrum Nomad. That's a fancy name. Finally, a non-biased news source that tells everything how it is without having to push their opinion. You know, it's not necessarily true we're not biased. We are Christian, we are conservative, but you're totally right that we don't try to push our own opinions or commentary in the story. So it's really great to hear that you're picking up on that.
Many mothers find strength in the experience of giving birth as they overcome physical challenges and embrace the journey of bringing a new life into the world. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. Go to preborn.com/FISM to give. That's preborn.com/FISM.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, oh, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
Throughout the month of May, FISM is partnering with Preborn to fund the light by providing 100 ultrasound machines to pro-life centers around the country. Now, how can you contribute? Well, for as little as $28, you can provide an ultrasound scan to an abortion-minded woman in crisis. And when that woman hears the heartbeat of her baby, she will choose life, get this, 90% of the time. It's remarkable. And guess what? With the help of a donor match, for every 200 scans donated, that's for a net value of $5,600, Preborn Ministries will be gifted an ultrasound machine to place at a clinic in need. Each machine has the potential to impact hundreds of thousands of mothers' choices. Preborn also offers additional support to mothers in need and presents the gospel to every mother who comes into their clinics, knowing that salvation is the greatest gift that can be given to a mother and her child. So go to preborn.com/FISM to give. That's preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Well, welcome back to Financial Issues on this Tuesday, what feels like a Monday
Especially
morning.
with all the tech craziness, Shana. That's right.
It is.
We're powered through it, though.
You just never, very funny.
Yeah, right. That's right. Wow, I didn't even mean
Unintended.
that. Yeah, there you go. That's right. We're charged this morning, as it were.
Unlike some of your EVs.
Mm-hmm. Yeah, seriously, I know. Good luck with those.
Yeah. Yeah, we are seeing a lot of demand kind of going away, just disappearing for those EVs. And I would imagine that if Biden, I won't say gets reelected, but if he stays in office, I would imagine he'll double down on those incentives to try to get that going again. But, you know, I think people are just starting to figure out it's just not a real reliable plan. We had our analyst meeting yesterday, and we were talking, and you know, it seems like the younger generation has bought into this, you know, green energy kind of thing, and I don't know. I guess Teslas are just kind of neat from an electronics standpoint, how advanced they are. But he said that his son rented a car, and you know, because we were talking about EV demand in our meeting yesterday, and a lot of these rental companies made big investments in EVs, and they can't hardly give them away. He's like, they'll just pretty much give you an EV if you'll take it. And he said, my son found out why. He said, because he did take it, and then he realized as he was sitting in a charging station for 2 hours at 11:30 at night, why they are so cheap.
Oh my gosh, it's brutal. Yeah, Shana, I've heard stories of some folks who had the same thing. They had to rent a car, and they were given the option of an EV, and they said, I am not driving that EV. And so they had to pay like hundreds of dollars to get a gas-powered vehicle. Like, it's ridiculous. But people are wising up. You're exactly right. I actually think that's a good thing that people are realizing, you know what, these cars don't work as well as gas-powered cars do. But it really is true. Yeah.
Another funny story about that is we had a contractor that was working on the studio here in Texas, and he was from out of town, and he has an EV back home. Well, when he got here, he rented one. I drove up to the studio, and my door was open, and there was a plug coming out the side of the building.
Yeah.
And I'm like, what's going on here? He said, I guess I should have thought, coming to Texas, especially in Refinery Central where we are, that there's no charging stations around here. He's like, the closest one is 25 miles.
Right. You got to pull out a gas-powered generator to charge it. Good grief.
No, he was using electricity from my studio.
There you go. That's right. Maybe that's why there's so many power issues, Shana, is because it was charging the stinking EV.
Well, that was not recent, but, So I guess we can't really blame it on.
There you go.
But,
there you go.
Just speaking of, grid issues, we're not ready for this. We're not, I guess this administration, the scripture talks a lot about counting the cost before you go to do a project, right? It says if you're wise, you count the cost and make sure that you have all the resources to get through it. And I don't believe that those in our government have actually done that. When you plug in these EVs so that you can run on green power, how do they get charged up? Well, the electricity comes from electric companies that are either running on fossil fuels, steam, or natural gas, which is still a fossil fuel.
Right.
Brilliant.
Seriously. Put in the middle.
Makes it seem like even a real green scheme, and not green from an environmental standpoint, but the green that lines the pockets of the people who are pushing this agenda.
Yep. Amen. Well, Shana, I know we had to hold D over from that break there, but he had another question for us. You want to get to D?
Let's do it.
All right. D, you're back on with us. Good morning.
Hey, great. I just want to say as an aside, I don't think cost is in the vocabulary that people run in this country right now.
Amen.
I think that's a foreign concept.
Money's free and it grows on trees.
Well said.
That's why they want to save the trees.
There you go.
Yeah. The MMT, modern monetary theory, really means modern money trees. So anyway.
There you go. We should market that, D.
So anyway, my question was,
I'm writing that down.
To this, the brokerage house I'm with is one of the really big ones, and they are really in your face about the agenda they're supporting on their website. But that's all I'll say. Yeah. So let's say I roll this over into an IRA. And I'm 72, so next year I got to start taking the required minimum distribution. The rest of my assets are pretty much in cash. So I'm thinking it would make the most sense for me to take the required minimum distribution from the IRA and let that grow tax-free for as long as possible, and then make up the rest of what I need to live on from the other assets. Does that sound right to you?
Well, I would pay close attention to what your tax bracket is. The other thing that I would encourage you to do is if you do any giving to any nonprofits, your church or other ministries, or if you're going to make a gift to Preborn, you can do what's called a qualified charitable distribution. And that's where you give directly from your IRA to a nonprofit, and you get to get that money out tax-free as long as you follow the rules to do that. So now you can shift over. I would shift over all of your. Do you itemize or do you use a standard deduction?
Right now we just use a standard deduction.
Okay, even better. So right now, whatever you get to deduct from your income from the standard deduction, you pay 0% tax on that, right? So you're deducting that from your taxable income. The way that the qualified charitable distribution works is it counts toward your required minimum distribution. So it counts toward the amount that you have to take out, because all of your distributions are going to be reported on your 1099 when you get it at the end of the year. And that's how the government makes sure that you're taking out the required amount, because if you don't, you're taxed 50% of whatever you didn't take out that you should have. So if you do shift and do all of your giving, now you've freed up some cash flow from the other sources that you are doing your giving from, and you're reducing your qualified balance. And the reason that that's important is because I think taxes are going to be higher in the future than what they are today. And you can't beat 0%. So you get to get that amount of money out at 0%. And then I would, 12, if you're in the 12% tax bracket.
My wife's the brains of the operation. She's not here right now, but she can listen to the recording. So
Yeah, so what I would do is figure out how to get to the top of the 12% tax bracket, because the tax system that we're in now expires at the end of next year. 12% is a really low rate. I think taxes are going to be higher in the future than what they are today. Even if they reduce the amount of the standard deduction, that's going to impact your taxes as well. So I would get as much money out of your IRA as you can, up to the end of the 12% tax bracket. And that's where I would focus on, doing your giving first, because your giving is not even going to count toward that, putting you closer to the end of that 12% tax bracket. And so I would get as much income from the IRA as you can in the 12% tax bracket, and then, maybe look to some other sources.
So you're saying I could take out, just for discussion purposes, like say 15,000 is the RMD.
Hey D,
I don't know.
Seth, are we close to the ag?
Yeah, we're actually coming up close to the ag here. D, why don't we hold you over once again, man? We got about 15 seconds left till the ag here, Shana. So
it's the D from Texas show today.
Yeah, that's right.
All right, folks. Well, we're about to hear from Craig Haugaard with the Ag Report. Take a break, and then we're going to come back with D and more financial issues. So don't go anywhere.
This is Craig Haugaard with your Financial Issues Ag Update for May 7th. Corn rallied over concerns that the planting pace was slipping. After the close, the planting progress report showed corn was 36% planted, down from the average trade estimate of 40%. Now, last year at this point, corn was 42% planted, and the 5-year average sits at 39%. On the close, we had July corn 8 3/4 cents higher at $4.69 per bushel. Soybean prices benefited from fund short covering as they reacted to concerns with the unharvested beans in Brazil. Now, in the past 10 days, we've seen rainfall totals of anywhere from 12 to 24 inches in Rio Grande do Sul. This has resulted in human casualties as well as damage to crops and infrastructure. An estimated 5.5 million metric tons of soybeans remain unharvested in that region, and the total loss from the floods is estimated is going to be roughly 2 million of those metric tons. At the close, July beans were 33 3/4 cents higher at $12.48 3/4. Wheat saw another round of funds exiting their wheat positions. The major fear revolves around drought, with forecasts showing a very small chance of precipitation for southern Russia, eastern Ukraine, and western Kansas. At the close, Minneapolis July wheat was 11.5 cents higher at $7.25. Kansas City rose by 25 cents to close at $6.75 1/4. And Chicago was 26 1/4 cents stronger at $6.48 3/4. Cotton futures moved higher but couldn't hold it, with the July futures ultimately closing $1 lower at $77.06. Livestock futures were mixed. June live cattle were 30 cents higher, $176.97 per hundredweight. August feeder cattle were $1.87 lower, $252.87 per hundred. And June lean hog futures were 77.5 cents lower, ending the session at $98.17 per hundredweight. Class 3 milk futures kept the good times rolling. We had June futures up another 21 points at a new all-time life of contract high of 1945. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
miracle of carrying a child creates a unique bond between a mother and her unborn baby. She feels the baby's movements and responds to their needs even before birth. Help create that bond between an abortion-minded mother and her unborn child by giving the gift of life through Preborn. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time, that sound will change a woman's mind and cause her to keep their baby. Give the gift of life to the woman that gave you life by sponsoring an ultrasound. Go to preborn.com/FISM to give. That's preborn.com/FISM. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby.
Here at the ministry, we get encouraging notes all the time, how people are blessed from the partnership, and I'd like to share one of those with you right now. I started this when Dan explained to me about having dividend stocks and investing in Timothy funds. So I said, why not get enough funds to cover my $85 contribution? So I did. Then they would send me more than the $85, so I'd be able to grow my Roth, to be able to buy more blue stocks off Dan's list, and contribute to you all. Well, I started with a small $2,500 investment in Timothy funds, and now with the other 10 to 11 blue stocks I have enough to help with the new amounts. I've been able to go from $2,500 in 2019 to $26,000 in 2024. And that's what we're trying to do here for you folks, is put forth companies for you to invest in that will not dishonor God's heart, first and foremost, but secondly, also companies that will give you a good return on your investment so you can build wealth for yourself, for your family, for your church, and be able to be a blessing beyond your life on this earth.
Invest your money in a God-honoring way. Go to Financial Issues.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. So glad that you're sticking with us today. Dee's had some great questions for us, and we've got some more callers in the queue. So I know that we said that we were going to talk about dividends today. We'll still do that if we have some time after we get to these questions, but you may have to tune back in tomorrow to hear about that. So let's get Dee back on the line.
Yep. Dee, you are back live on Financial Issues, brother. What's your last question?
Okay. Yeah, I'll make it quick. So just to review, you think it is a good idea to roll this where I am right now into an IRA to get a higher yield?
That would be one of the reasons. I mean, the other reasons are you'll have more biblically responsible investment choices. You'll be able to do those QCDs because you can't do them from your employer plan right now. So you'll be able to get that money out tax-free to do your giving. So, yeah, lots of great reasons to do that.
Okay, great. I know there are other people waiting, so I'll yield the rest of my time.
Thanks, Dee.
Thanks, Dee. You had some great questions today.
God bless, man.
Thanks for calling.
Next one we have here, Shana, is Joe. I believe this is Joe. Darlene, is that correct? Joe from Montana? He is calling. Oh, this is John. John calling from Montana. John, good morning. You're live on Financial Issues.
Good morning. Thank you for taking my call.
Absolutely.
Thank you for your ministry. It's been very beneficial to me. I'm trying to understand some of the principles of the CD ladder, and I'll give you some context. I started the ladder in December of last year. I was still building the portfolio at that time. And it's based on your recommendations. I'm using the 65 into retirement model. And I turned 70 in December of last year. So I'm looking ahead to 2027 when I would turn 73 and have RMDs. So if interest rates stay acceptable to continue a ladder, do I move beyond that December 27, or how do I kind of look at that? And I guess another part of my question is how do you judge when you don't even participate in a ladder anymore?
Okay. Well, I can answer the second question first. That's a quicker answer.
Okay.
when we change the asset allocation models. So that would be your cue there. And the reason that we like the ladder right now, we have an inverted yield curve, which means that short-term rates are higher than long-term rates. For example, when you build a CD ladder, let's say that you're going to stay short and go 2 years, and you're going to get 4 CDs. You're going to get a 6-month, a 12-month, an 18-month, and a 24-month. For about the past year, you could get all of those paying right close to 5%, maybe a little bit more, maybe a little bit less. And so your whole CD ladder is going to yield you close to 5%. Typically, long-term rates are higher. And, in a normal ladder, you might do like a 1 year, 2 year, 3 year, 4 year, and 5 year. We stayed shorter because the rates were better. Anticipate that longer-term rates are going to come up and or shorter-term rates are going to go down. So at some point, we may shift to going more longer-term if we see those rates come back up, or we may shift to something different. So just pay attention when the asset allocation model that's going to tell you when you need to change. And by building the ladder, what you've done, if you've done it that way, is now you have money that comes due every 6 months. So that money will drop into cash. Your cash will become heavy. Then you just look at your portfolio tracker and you see where it needs to go. If it still needs to go back into fixed income, you're going to want to get a CD that matures after the last one that you have. So if you originally started with a 6-month, 18, a 6, 12, 18, and 24 month, you're going to want to get a 30-month, one that matures 6 months after the original one that you got at 24 months, if that makes sense. And just continue that way until either you're overweighted in fixed income, but, this way you'll be making some portfolio decisions every 6 months, which is not that big of a deal. You should be looking at your portfolio for balance reasons about 2 to 4 times a year anyway.
Right. So my understanding is that and the reason I'm calling is because I have a rollover, and I chose an automatic rollover system. Okay, but I have a rollover come in June, and I would obviously look at a 24-month CD and continue on, and the current rates right now are about 5%. So I just would keep doing that kind of a rollover until there's guidance from FISM as to things changing.
Mm-hmm. Yeah, and the thing to do too, because you have other pieces of your portfolio, I'm assuming, if you're following our asset allocation model. So those things can increase or decrease, just depending on what they're doing at the given time. So I would just readjust your portfolio tracker when that CD comes due. Just reduce the amount that's in CDs, put that amount in cash, and then look at the output. If it shows that you still need to go back into fixed income, then go with that 24-month CD.
Okay, so in other words, pay attention to the fixed income category and how it should be managed as a whole in relation to whether I do a rollover or not.
Now, when you say rollover, does that mean money coming from your employer-sponsored plan?
No, I'm not. I'm retired. The CD is in a ladder that automatically rolls over with Fidelity.
Okay, so I thought you were talking about
yeah.
Okay.
They sent me a notice that it's going to roll over, and obviously, if they're going to do the CD ladder appropriately, it would roll over into 24 months. Mm-hmm. And I'm just trying to understand some of the principles and guidance that would say I get to June of 25, which is my 18-month maturity date, and all of a sudden the things change and there's not a recommendation to continue with that kind of a ladder, then I wouldn't roll over. I just go ahead and take the maturity and put it into cash.
If there's no other benefit to doing the automatic rollover, I probably would just go manual and, set yourself a reminder that it's, time to rebalance and check out your tracker.
Okay. So I have to kind of judge the whole portfolio in relation to managing the CD. I kind of get that thought from you too.
Yeah. Yep. You got it.
Okay. And do you have time for another quick one?
John, we can make it real quick. Yep.
Okay. This kind of came from the last caller and talking about rollover in the 12% tax bracket and that going away next year. I have an inherited Roth IRA. Would it be beneficial for me to roll that over into a standard Roth? It's not a large amount.
Oh no, I would never go from a Roth to a traditional, because with the Roth you've got tax-free growth there. That's the best kind of growth that you can get. I would definitely.
No, I think you misunderstood me. I have an inherited traditional IRA. Would that be beneficial to roll that over into my Roth IRA?
Oh, okay. Yes, I did hear you incorrect. I thought you said the other, because you can have an inherited Roth IRA too, by the way.
Right. Yeah, I didn't designate that good for you. So
it's going to depend on your tax bracket as well. Whatever you have to do to get to the top of the 12% is what I would do. So if you have room in the 12%, and you want to look at your balance in other accounts, because the thing you have to remember is a Roth is still qualified money. Qualified money is money that qualifies for special tax treatment because the government says so. So because the government says so, they can change their minds and say something different. So the Roth is the most tax advantage type of account, though. The
only thing that I think about is the 5-year rule if I do this.
Yes.
And my age and all of that stuff. So.
And actually, I don't believe that you can convert your required minimum distribution, but you could go above and beyond that and convert other to the Roth.
Oh. So I might not be able to convert the inherited IRA legally then, according to IRS rules.
Yeah.
Okay.
We don't have another break.
I'll give the time up. I was just a thought that I had. I appreciate your time.
Thank you, John.
Good thinking, John, and thanks for asking those questions.
John, if you do have that follow-up, man, we're coming up to the end of the show now, but please feel free to call back. Definitely.
All right.
God bless, brother. Shannon, I don't know if we got much time for anything else. Boy, the phones were lighting up today.
They were. Yeah. What about that stewardship?
Yeah, let's do that here. Close the show here. Our stewardship verse, folks, is Proverbs 11:24-25. One who gives freely, it grows all the richer. Another withholds what he should give and only suffers want. Whoever brings blessing will be enriched, and one who waters himself will be watered. Shana, this is not the prosperity gospel. I think this is so much more about just the simple law of God blessing his people when they're obedient to him. So I want to encourage us to just trust in the promises that God's going to bless us when we're obedient to him, and let's be thankful that perfect obedience has been accomplished in Christ. Good news.
Amen.
Yep.
All right, folks. Well, we're at the end of the program, but Lord willing, we will be back with you tomorrow to remind you that time's getting short. The Master's coming back, and we want to help you be found good and faithful stewards with everything God has trusted you to manage. Check us out at financialissues.org. While you're there, make your gift to Preborn for Mother's Day coming up this weekend. We'll see you tomorrow for more Financial Issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.